Let's get more on those Canadian profits in banking. RBC, TD, and CIBC topping estimates. We're joined now by Diana Avigdor, Portfolio Manager and Head of Trading at Barometer Capital. Diana, great to see you. Royal Bank down. We've heard that perhaps that was because of a rise in provisions. What's your take?
That's exactly it. It's also the more elevated valuation, but it's really the earnings were excellent across all of our banking sectors, plus minuses to everyone. But one of the things that really stands out for really most of them was the return on equity that they posted. Great cost controls in the measurement of efficiency ratios. Bottom line regarding Canadian debt is that these banks have built up so much cushion. Capital ratios are very healthy. So they're going to be up and down. I mean, the banks in general are trading at pretty high valuations relative to history. I think it has various reasons, not just the earnings. There is a Buy Canada trade going on. TSX is, as you mentioned before, trading at an all-time high. There's lots to like here.
Yeah, the banks, they've just been so reliable. And it looks, I mean, a lot of mortgages still have to be renewed, but it looks like the market not that worried about possible defaults or home borrowers running into trouble.
Yeah, and maybe this is what's bugging RBC a little bit, is that loan loss provisions were a little on the high end, and they originated from mortgages. But all the other metrics like wealth management and capital markets, and like I said, they built up so much cushion, and just because some mortgages are a little off, it doesn't mean that they will not work out at the end. Now, we do need a macro lift to the Canadian economy in order for this to continue going. But we've been talking to you guys about this a lot. Oh, yeah. There really is a buy global trade going on, of which Canada is part of. And I think the marginal dollar comes into Canada before it comes into the U.S. And if I was to look at the earnings, Nvidia's earnings were great as well. Amazing, as a matter of fact. But it's trading down. I think the marginal dollar goes to the Canadian banks, the commodity trade, and the sell technology continues to be a theme. And you can see that today more than ever.
Let's put up a 1 year for the NASDAQ 100 as a proxy for tech stock. For one thing, we do hear that there's local opposition to data centers in the United States, and politicians will be forced to listen, presumably.
That's exactly it. The bear case is not that Nvidia is not an amazing company posting 75% growth in their all their metrics at 75% margins. The problem is the data center built out, and already communities from Virginia to Arizona blocking $98 billion in projects, citing electric bills, water issues. Nobody wants a data center in their backyard. So this might or might not be an issue. And then there is the debt that everybody that is bearish would like to talk about how the bad debts are piling up. We haven't seen any spreads blowing out or anything like that. It's all speculative at this point. But the bottom line is that it's just so much unknown. It's a new thing. We don't know exactly who's going to benefit. It's all speculation at this point, and we're not going to get resolution near term to our questions. It's 2, 3, 4 years ahead. So there's lots of volatility. And talking about volatility, the average stock in the S&P has had a move of 10%, while the index is trading at a high because they balance them out. But this kind of internal volatility has to come to some kind of resolution.
for the broad Canadian market, we've seen so many, I'm thinking more of the smaller and medium stocks. We've seen so many takeouts, privatizations, a sign that investors just will not pay up for Canadian equities, certainly if they're smaller. Is that trend going to reverse, Diana, do you think?
This is public versus private market conversation. And over the last decade, everywhere, there has been a decline in public markets. Exits from private equity into the public market have slowed. I think that what we've seen in the last 12 to 18 months is an increase in private exits into the public markets. We have in Canada Apotex is coming to market. I think that if the equity markets are starting to pay up a little bit, then we will see some exits from private to public. But what we need is some kind of visibility into the macro, and we keep going back and forth. I think that what's going to be a relief for Canadian markets is when we start hearing about resolution to the CUSMA talks and see what happens to us here. And then I think that Bank of Canada will also be able to be perhaps more fluid in the rate environment, perhaps can take rates a little lower at that point. So I think they're holding back a little bit. Everybody's holding back a little bit to see what happens with the CUSMA conversations.
Diana, thank you very much indeed. Diana Avigdor, Portfolio Manager and Head of Trading at Barometer Capital.